Happy Friday. This is Finance Friday, the show where we give you the information you need to help you grow and protect your wealth. I'm Amy Novakovich. I'm a certified financial planner and CEO at Nova Wealth Management located in Southwest Florida. Go ahead and like us on Facebook. We always try to post a whole bunch of content just regarding anything with money related. Go to YouTube, see us on YouTube, see us on Instagram, and also, if you have any questions throughout the video, please go ahead and comment and then share this out to those that might want to see it, because today we're actually going to talk about something that happened today. So a lot of times we're talking about things in general or defining things or clarifying things, but today a huge cryptocurrency bankruptcy occurred. So we're going to be talking through that, what that means for the crypto markets, and then I also thought it would be pretty relevant because I actually gotten some questions just this week on the differences between stocks and cryptocurrency, and then how you might purchase and what you might purchase and what is actually a buy right now or a sell. So we'll get into that. But again, share this out. Please comment if I can even see your comments. I don't even know if I can see your comments on here. Facebook changes the live every single, comments. There it is. Okay, so go ahead and comment if you have any questions. You can always go to our website, novawealthmanagement.com, and hit on the info, and that will email us directly as well. But let's get into it. So FTX Group filed bankruptcy today. So Sam, I think his name is Bankman. Sam Bankman, I think is what his name is. He's the CEO. He's like a 30-year-old man that a week ago had $16 billion that filed for bankruptcy today. This was an exchange. So crypto, if you're not familiar, I don't know the extent of if you're familiar or not. It's a new currency that's digital. I shouldn't say new. It's fairly new. It's newer than newer than most currencies, let's say that way. But it is an exchange to trade on, and FTX was a giant exchange located in the Bahamas that just filed for bankruptcy today. There's 130 companies that are under this holding company, FTX Group, and they filed for bankruptcy, which again is a big deal for liquidity, meaning the ability for people to liquidate their money out of cryptocurrency. The liquidity of cryptocurrency is what has been one of the many concerns for those that want to buy crypto, because obviously everybody sees it flying on the headlines and it's like, oh wow, crypto, yeah, Bitcoin, yeah, Ethereum, it's flying, it's up to 65,000, it's down to 20,000, it's all over the place. And so it's a hot buzzword. But really, what does it mean? What does it do for you? And one of the big differences between crypto and stock is that it is not really regulated. So the government cannot regulate it. Now, some people look at that as a pro. Some of it is an advantage, right? I don't want my government to have a hand in it. So it was attractive. In fact, that's really what kind of started the snowball into cryptocurrency, is some said, oh wow, if it's not regulated by the government and it's just regulated by us, then it can't be corrupted or it can't be manipulated, right? So that was one of the attractive things. But the downfall to that is you have human error and you have the human ability to go bankrupt, make bad decisions, go bankrupt, and that affects the whole market. And if it were regulated, maybe, hi guys, and if it were regulated, maybe that would be different. So the stock market is regulated. The crypto market really isn't regulated. Again, that's a pro and a con, a good and a bad thing. But the stock market has also lost. It was like a dozen stocks, like Apple, Microsoft, Google, Meta, which is Facebook. They lost $5 trillion just year to date this year. So to sit back and say, oh wow, FTX claimed a bankruptcy at $16 billion, you might think isn't a big deal. But there's really, in the crypto markets, there's 400 million people in the crypto markets that own crypto on an exchange right now. So it's a lot smaller than the stock market. So this is a big deal. This is a huge deal. And if you want to buy crypto, you need an exchange. So you would need to open an exchange account like a Coinbase. I have no affiliation with Coinbase. I'm just telling you how you would buy it if you wanted to buy crypto. Like, you couldn't call up an investment person like me because it's not regulated. Now, with that said, I can buy, and this is where it might get a little complicated, but bear with me, I'll try to explain it. I can buy a fund or an exchange-traded fund that trades different cryptocurrencies or trades the companies behind the cryptocurrency, like a Coinbase. Coinbase is a stock. So I know that can get confusing. So Coinbase is an exchange where you would buy cryptocurrency. They make money doing that. So they're a corporation. That corporation is a stock. It's publicly traded, so you can be an investor in Coinbase without actually having a Coinbase account owning cryptocurrency. I hope that makes sense. There is a difference there. Stock is more of partial ownership, equity stake, let's say, in a company. Crypto is a currency, is a digital currency like the dollar or the yen. It is a cryptocurrency. It's a way to buy and sell things, items, versus stock is more of an ownership in a company, an ownership stake. So you care if the company does well. Cryptocurrency has a technology behind it that's called blockchain. Blockchain is the logistics of how you connect a buyer and a seller and how you transact actual movement of cryptocurrency and how you document the different transactions. That's the blockchain technology. And that's being used in other things besides cryptocurrency. That's being used already in hospitals, in inventory systems, in logistics companies. So blockchain is being used. So there's different blockchain companies too. So there's exchanges, there's blockchain technology companies, there's cryptocurrencies. You need an exchange to buy just the coin of cryptocurrency. If you buy the ETF, you are actually not buying the coin. You're buying futures that mirror the price of the coin. Kind of like gold, like the GLD. Like if you want to buy physical gold, let's compare it to that, because I know the crypto world is very confusing and I'm going to try to explain it, and sometimes I over-explain, but I'm hoping this is helpful. So again, share this out to anybody that you know that this might be helpful to, that is looking to invest in crypto or is looking to at least put some cash to work in the markets and can't decide between stock or crypto, or maybe they don't know better. So hopefully this would help them. But in the crypto world, if you are buying like a GLD, that's for gold, you are buying futures of how the gold bullion trades. So you're not physically, if I buy the GLD, they're not going to ship gold to my house and I'm not going to have to put it in a safe. I am buying what trades like the price of gold. So I get the advantage and the disadvantage of owning something that trades just like the price of gold without having to physically store it. Same thing for crypto. So you can buy the Bitcoin ETF without physically having to open an exchange account with like a Coinbase or an FTX that's now bankrupt, or like a Coinbase, and open an account with them and physically buy the coins. You don't have to do that. If you buy the ETF, like the Bitcoin or the Ethereum ETF, you now own something that you can get out of in 10 minutes. You could buy it now and get out of, and you are just trading the price of that crypto coin, but you're not actually in possession of the currency. Again, I hope that makes sense. But the big differences that I really want you to take away today is that they're two very different things, right? So stocks are down, crypto is down this year. This has been a big year for things to be down, including bonds, which we don't need to get into today. We're going to stick with stocks and crypto. But stocks are assets. Stocks are not as risky. Now, although I am very well aware that companies like Apple and Google or like Nvidia are down huge this year. I mean, you're talking 30, 40% this year, which yes, is a big deal. But does anybody out there think Apple is going anywhere, or Amazon is going anywhere, or Google is going anywhere? I guess they could. But the point is, the likelihood of like an FTX exchange that was just opened in 2019 that was based out of the Bahamas going under is much more likely than Apple going under. So you're dealing with two different risk levels here. One, stocks, I would say, aggressive, but not likely if I buy Apple stock that I'm going to wake up next week and my money is gone. Versus crypto is what I call speculative investing. You really don't know where you are in the process of, oh yeah, it's down, so it should rally. Like a logic with an Apple, like, oh, it's down this year, it's a good buy, it's on sale. I wouldn't say that about crypto because you really don't know. You don't know. This could be down for another 2, 3, 4 years. You don't know. Now, if you have a long time horizon, let's say you have 10 plus years, and you're thinking, I really do want to go aggressive, and this money isn't going to make a difference in my life. You have 2, 3, 4, 5 grand, or I guess it could even be 100 grand depending on your net worth. But this amount of money won't make a difference in my life. I would suggest owning some crypto because this really could be the way of the future. I would just say it's a little too early to call. It's speculative. Now, if this is your retirement money, okay, I would totally be buying some good quality stocks that are on sale that pay good dividends. You know, like an Apple is a great stock. Now, this isn't a recommendation. I can't sit here. I don't know who's watching this video. I'm not going to sit here and recommend it to you. But I am saying if you were already experienced with stock, or you were already experienced with investing and you're opening up a stock account because you want to invest some retirement money, I'm asking you to consider it and look into it and see if that is appropriate for you. So I'm trying to give you some ideas and educate you and give you some information so you know a direction of where to head. So Apple and Google and Microsoft are all down big, right, this year. So if I'm looking at my retirement, I think those are some pretty good investments for a long-term time horizon investor. Now, if it's money that you're going to need next year, you know, I really don't know where Apple's going to be in the next 6 months or 12 months. So I wouldn't say go putting all your savings into something like Apple or Amazon. I mean, they're still aggressive stock. I'm just saying you're in a whole nother league when you're with crypto. That's totally, in my opinion, rolling the dice as to if that is going to be around in 10, 15, 20 years. But I feel pretty confident about Apple and Amazon and Google. So there is differences there that you must acknowledge that you're at a different risk level. Also, liquidity. Liquidity is how fast can I convert my money to cash? That's the definition of liquidity. So in stock, if I were to sell Apple stock, I know I'm getting my money in a matter of seconds. I know when I hit sell that there will be an order on the other side, and I know that cash will be going into my investment account right away. Oh, I thought I had some more comments popping up. Go ahead and comment, guys. Any questions, or if you need more clarification on something, please just let me know. And if you're watching this on the replay later, feel free, again, to go to info@Nova Wealth Management or novawealthmanagement.com and connect with us there and ask us some questions. But again, another difference is liquidity. So stock, again, I know I can press a button, my money will be there. Crypto, depending on which coin you're trading. Now, Bitcoin, Ethereum, those are big. So the chances of you being able to convert that to cash pretty quickly are likely, probably not as likely as like an Apple or Amazon, but are pretty likely because they're big. But if you're buying some of these newer crypto coins that are just created, or you only have a small amount, or you're trying to buy something on an exchange, or I'm just saying the liquidity is much, much different in crypto. Don't put cash there that you might readily need within a week. Crypto is a different market for liquidity. So you've got two big differences so far between stock and crypto. Stock is less risk than crypto. Crypto is more speculative. Stock is more on the aggressive level. And yes, speculative is more aggressive than aggressive. Speculative is more just kind of a guess. I don't want to say a guess, but it really is a guess. And then liquidity. And then the other difference that we mentioned earlier on is that stock is an asset. You can actually reinvest dividends, buy more shares. It's an asset for growth. It's an asset in a sense that you have not part ownership, but you have like an ownership stake, an ownership interest in the company, versus crypto is a currency, a way to trade items, a way to buy and sell items. So it doesn't really have an intrinsic value versus a stock does. So those are two also very big differences. So again, very, very confusing, but in light of the FTX bankruptcy, this does make a difference, guys. This kind of shows you how quickly the crypto markets can change overnight. And it wouldn't be the situation in a stock market unless we're in this awful recession. You know, like in 2008, we had big companies going under. For sure, big companies that you wouldn't think, like a Wachovia or a Lehman Brothers. I mean, those companies went bankrupt. It didn't happen overnight. You know, you just started seeing FTX in the headlines maybe a couple months ago. And it took a while for Bear Stearns and Lehman Brothers and Wachovia to actually claim that bankruptcy and go through that. But it also is just on a much smaller scale versus Wachovia got bought out by Wells Fargo. You know, things shift around in the bigger companies, whereas crypto is just done. It's done. 130 companies under FTX Group, Chapter 11 bankruptcy. So I would say that's a big difference between the two. And I did also mention regulation, so that's another big difference between the two. So I hope this clarified some things. I don't want to take it on too long because I know it's a lot of information, but crypto is kind of like the hot buzz right now. And I would say if you've got long-term money and you've got an amount that won't make a difference in your life, sure, own some crypto. I mean, I think a small amount in crypto is responsible because it really could be the way of the future. It's just kind of uncertain yet. And I think buying that blockchain technology is also another way that you could go, because that blockchain technology isn't in just crypto. So like a company like Square actually renamed their name to Block because they're involved in the blockchain technology. So if you check out Square, I mean, their stock is down big this year, but it's one of those opportunities that they're making a shift to go into the blockchain technology because it is something that they think is going to stick around, not necessarily just in crypto, but in other areas as well. So take a look at the blockchain technology stocks. If you're looking for a different way to get into crypto, but maybe you don't want it to be so crazy speculative investment. All right, guys, so it's already 15 minutes in. I know that was a lot of information. Share this out. If you have any questions, please reach out to us, but I hope you guys have an awesome weekend. And again, reach out if you need anything. Thank you. See you later.